Hello everyone. I just wanted to cover off a quick video here, which is it's kind of around setup, and it's something I haven't covered before. But I was recently having a conversation with somebody that I work with on a one-to-one basis, and we were discussing some of the techniques to implement. And I thought it was a really good idea to put some of those ideas out in towards the rest of the group. So I want to cover off a few of the things that I utilize and that really help me, especially when I started to take trading more seriously. So I'm going to run through a couple of really key things that I utilized and that I found really helpful, and I still use to this day. They haven't gone anywhere. I still use them to this day. So I'm just going to take you through a quick exploration of that. So first up, what you can see in front of you is essentially just a personal Discord server. This is just a Discord server that I created a couple of months ago, and it's basically just for sharing my own personal thoughts on charts and setups. It's essentially my trading journal. Okay, so it's the migration from I've typically always worked from a paper journal, and this is my migration to a online version, and I'm really pleased with the way that Discord works for doing this. So first of all is everybody should be using a journal. If you are not using a journal yet, you need to start, because the only way to improve your overall trading and to ensure that you're set up correctly is by using a journal. So this is kind of a rough overview that I use, and I'll just take you through some of these channels. First of all, this is primarily my traditional market thoughts and plans, but there's also a couple of BTC things in here that I will cover off just in the second half of this video. So essentially what you have is you have stocks, any positions that you take, current balance and updates to balance, and then I have a month by month trading journal. So this is my November entries, and obviously these are my December entries here. So what I tend to do is at the start of every single day, and especially at the end of the week for me trading traditional markets at the moment, is I will come in here and I will put together the setups that I'm looking for the week ahead. So when we're looking at traditional markets, for example, these are the sorts of plays that I'm looking to monitor price action around for the upcoming week. So what I'm doing is I'm setting myself out with some expectations of what I'm looking for over the course of the next week in terms of price action. And the same applies to crypto markets. Okay, if you are trading off slightly higher time frames, or even if you're scalping but you need to have that higher time frame picture, then this is a really good way of doing that, is throwing it into your journal, and once a week, probably on the weekly close on a Sunday evening, is sitting down, going through your charts on a higher time frame basis and plotting out your areas of interest for the upcoming week. What that does is it helps to focus you, and it focuses you on the important price points, and also reduces the likelihood that you're going to get distracted by the smaller price movements during the course of the week. Because we know that once that price action kind of takes hold, especially if it's been quiet, let's say Monday and Tuesday are quiet, and then all of a sudden there's this big spike in volatility on the Wednesday, often that can really like throw the overall thought you had. Whereas if you have it down somewhere like a Discord server, or in a pen and paper journal, and you can refer to that and say, okay, what is it? What price level am I looking at? What is the setup that I'm looking for? So having the ability to note this down somewhere, and for me, Discord's been very helpful in doing that, is a really big advantage. The other thing that I do in here, obviously, is I note the positions that I take. So when I'm taking positions on trade, I have to update it obviously in multiple places because of running the Discord, but I also note it in my own personal journal. So if I'm taking a position, then I will, after I've taken that position, I will come into Discord and add that to my positions. And that helps me keep a running track of the trades I've taken and allows me to assess them once they've completed, stopped or hit profit. Then I can stop, look at those and assess the play. Where did I go wrong? What was right about the trade? Right? What are the success factors I can take forwards to implement to other trades? So I find that having your positions in there, along with these weekly, daily, monthly plans that you have, is a really solid base for the journal. Okay, so they are the crucial things that you have included in here is a daily, a weekly, or a monthly plan. And if you've got the time, then dedicate yourself to doing all of them. At the start of each day, it would be fantastic if you could look at higher time frame charts, especially if you have ambitions of trading full time. Sitting down, looking at the charts each day and coming up with a daily plan. So for example, on Monday, when the stock market's open again, I have my plan created. Okay, my Monday setup is here for AMD, for what I'm looking for on Monday. So I'm already beginning to think about the week ahead and what I'm looking for in terms of price and the potential playouts that I'm going to take from that. And then the other one obviously is this position. So keeping track of every single position you take, winners, losers, break evens, it doesn't matter. Everything goes into positions. Don't try to hide yourself from the fact there are losers. It happens to everybody. And the losing trades are quite often the most powerful sort of pieces of learning that we can have. So make sure you note every single position in there and throw yourself in a TradingView link as well, so you can see why you took that setup, and that will allow you to assess it and critique yourself afterwards. So that's kind of the first part of this, is making sure that you have a journal and you have a plan, daily, weekly, monthly. The second part of this is about trading rules, and I covered this last night on the podcast I recorded with Charles, but it kind of struck me that I haven't really covered it off in any further detail in the group. But having a set of trading rules is incredibly important. So if you are a trader who trades off, let's say as an example, like me, right? I trade off AO divergences on Renko on lower time frame, and I have my entry and my exit conditions, right? Which is what I share with the group. Now, there are multiple different systems that you can have, and not all of you guys are using Awesome Oscillator and Renko, right? Some of you are using supply and demand, some of you are using support and resistance levels, some of you are using moving averages, some of you are using divergences on RSI. So there's this whole range of approaches that we can have to trading. But what's incredibly important is that you focus your approach down to a set list of criteria. So let's hop into here and take a look at what this could look like, okay? So let's say, for example, you are an RSI divergence trader, which is absolutely something that you could be, okay? And you could be profitably as long as you follow a set of rules, okay? So let's say, for example, that you are an RSI trader. What are your trading rules? Well, the first thing that you have to see is, number one is there has to be a divergence present, right? That's the first rule that you have in here. If you want to slightly drill down into that, you could specify the time frame. So you want to say the 4-hour time frame. Okay, so that's your first rule for entering a trade. If I want to enter a trade, there has to be a divergence present. You may expand on that rule set, because you may say to yourself, well, actually, the most powerful divergences that we can have are the ones that occur near a support or a resistance level. Okay, so if we say there has to be a divergence present, and number two is the divergence has to form near a SR level. Okay, that's our second rule. So we've now got two rules. So we're already starting to increase our rule set for what we're looking for that qualifies us to take a trade. The third rule that we may have is the divergence must be in the direction of the trend, e.g. bear divergence in a downtrend. Okay, and what we have now is we have a very basic rule set for how we tailor our trades. So what do? Well, first thing is we do not take any trades that do not check our rules. Okay, well, let's change that wording. That do not satisfy our rules. But what you are starting to do here by having this, and having this located in your trading journal Discord server, is you have the ability to begin to tick these off one by one. So let's say, for example, we are looking at a setup on BTC, and the first thing that we see is that there is a 4-hour divergence present. Okay, so we see that there's a 4-hour divergence. We see that that divergence is occurring near a support level. So we've now ticked off our first rule, that's a hit, and we've ticked off our second rule, that's a hit. But our third rule here, the divergence must be in the direction of the trend, well, it isn't, because what we have is we have a bull divergence at support. So we don't manage to tick our third rule. Now, instead of just ignoring this trade, okay, because it satisfies rules numbers 1 and 2, but does not satisfy, let's change those caps, but it does not satisfy 3. So what can we do? Well, along this side here, you can see BTC scalp A, B, and C. So if we have a setup that ticks 2 of the 3 trading rules that we have, then this for me forms part of a B setup. Okay, so if we think about this as grading, okay, we've got A, B, and C setups. Okay, obviously A in our situation here is ticking all 3 of our rules. Okay, this ticks 2 of our rules. And this ticks 1 of our rules. Okay, so what we're doing now is we're not only creating a basis that says if we don't have a trade that satisfies any of these rules, number 1 is we don't take it. So we're setting in some discipline here. Then what we're doing on the back of that is we're starting to create a grading system that allows us to think about our positions in a slightly different way. So like, let's say, for example, we're looking at this A, B, and C setup. So we know now that an A setup ticks all 3 of these rules. Now, would it make sense to you, if you were going into a position on this, to place the same amount of money on a trade that ticks 1 of your rules as a trade that ticks all 3 of your rules? Right? It doesn't make sense. Because what we want to do is, when we have these A, B, and C setups, and again, this is just an example, you may have an A, B, C, and D setup, but it does not make sense to utilize the same amount of money on a grade A setup compared to a grade C setup. So what do? When we get a setup that satisfies all of our trading rules, it's a prime setup, okay? We want to look at ways to maximize our profit from a great setup. Okay, what does that say for a B? Okay, well, it says we want to slightly adjust our setup and position. Actually, let's just change it to position. Based on this only satisfying two rules. Okay, I've got to change this, otherwise it will drive me mad. There we go. And on a C setup, okay, this is really, really important. On a C setup, if we only tick 1 of these rules that we've set for ourselves, what we want to say is we either adjust our position size accordingly. Okay, and by saying adjusting our position size as we work our way down the grading system, okay, so poorer setups, I'm referring to reducing your position size, right? So we either adjust our position size accordingly, which is reduce, or we ignore the trade, right? Because that's also a possibility. If we only tick 1 of our setups here, right, if we only tick 1 of our rules, then we also have the opportunity to ignore the trade, right? Why would we want to take a C grade setup? Maybe if we waited a little bit longer, for example, we may see this divergence form a little bit higher up, maybe near a resistance level, or lower down near a support level. So it doesn't make sense to utilize the same amount of money in a grade C setup as it does in a grade A setup. Okay, if we've got a system that has a set of rules, and again, remember this is just all an example, okay? You are going to have your own rules for the system that you employ. That could be like, number 1 is a cross of the 50 EMA. The second rule in there could be trading above 50 on the RSI. Rule number 3 could be bouncing off a support resistance level. You have to figure out what the rules to your system are, so you can begin to think about grading the setup accordingly. And then once you have the ability to grade the setup, okay, you can then look at maximizing the amount of money that you are willing to put behind these different setups. And then, like you can see in this journal, okay, this is where it all comes together. Like you can see in this journal, you can then begin to log the entries that satisfy all 3 of your conditions, okay, right, in a grade A setup, 2 of your conditions in a grade B, and 1 of your conditions in a grade C. So you then begin to get a sample size that you can run through back testing, look at the way that you can alter your position sizes accordingly to ensure that you're maximizing and taking the most money from the market on those great grade A setups, okay, and you're losing the least on the poorer setups. So you've got this opportunity by creating this set of trading rules, okay, just by starting off by sitting down and thinking about what are the rules that I need to see to enter a trade. Okay, that's the very core of this idea. And once you have that, what you can do on the back of this are some pretty great things. Okay, you will naturally improve your discipline. You will give yourself an increased sense of focus from being able to review a list, tick them off, grade them accordingly, position accordingly, okay, and then trade them. So all of this, I hope you can see, comes together. And I think the Discord, a personal Discord server, is a very good place to hold all of this information, to tie it all together. And this will give you such a great set of information. So if you are thinking about taking trading more seriously, and even if you're not thinking about taking trading more seriously, but you want to ensure that you are making and taking the right steps to becoming a profitable and the best trader you can be, then this is something that you absolutely need to be employing and to be thinking about. So if you haven't done it yet, okay, and I would be surprised if many of you have, this is a very good opportunity now that you've watched this video to go and take some time, create a personal Discord server, and create your trading rules. So when you get a free moment, and while you still have the motivation to do that, go ahead and start thinking and creating those trading rules so you can get the backbone of a systematic approach in play. Okay, cool. Any questions on what I've covered off today? I realize that this has been like a pretty intense 18 minutes of video. So any questions that you have on the back of this, then please feel free to shout me in the Discord. I will always be around to lend a helping hand or to answer any questions. Thank you, guys.